Hello, my name is Amanda Johnson. I have many titles, but today let's just focus on one. I am a licensed life insurance agent for the beautiful state of California. And if you are currently searching for life insurance or just want to learn more about the benefits to building your legacy, I am happy to serve you with finding solutions and the best options for the betterment of your family's future. Six life insurances I can immediately assist you with are final expense, term life, term life with return of premium, whole life, universal life, and index universal life insurance. I will break down each life insurance types in the following video. Stay tuned. Final expense insurance is a smaller whole life policy, which means this is typically for people between the age of 50 and 85 who just want to focus on the end of life expenses for their funeral, any medical expenses, or outstanding debt that they don't want to leave with their family. You typically don't need a medical exam, so if you do have diabetes or high blood pressure, you will still be able to get coverage up to $50,000 to take care of those end of life expenses. And this is a great option for people who may not have much to leave behind, but do want to make sure their family is able to bury them without any other problems. Now, term life insurance is not a permanent policy, but it has some very unique benefits because you can choose how many years you would like coverage for. It could be 10 years, 20 years, 30 years. So this is perfect for young families, homeowners that still have a mortgage, young adults with student loans or outstanding debt, and also business owners because you may not have a large budget for life insurance, but at least you're able to have coverage for the things you're responsible over. So yes, term life is a very good option to have. Term life insurance with return of premium. What does that mean? It's the same coverage as term life, which means you can choose 10, 20, 30 years of coverage. However, you can receive all the money back you put into the policy up to 100% tax free if you outlive the years of the policy you purchased. So this rider on this policy is a great benefit and it acts as a savings account essentially, knowing that you're going to get this money back if you live, you stay healthy and all that good stuff. So yes, this is a great option for those looking for a beneficial life insurance. Whole life insurance is a permanent policy as long as you pay your premiums that allows you to build cash value over time. What does that mean? It means the premiums that you pay and the interest that you accumulate turns into cash value, which allows you to take loans to put towards anything else you may have in life. And that is why people typically choose whole life for the cash value, uniqueness value of the policy. This is great for people who want to plan long term wealth building, estate planning, and wealth transfer options. And although this may have higher premiums, it gives you good benefits if you're going to buy life insurance and use it in its full benefit of it. I think that whole life is a great option for business owners or anyone focused on actually building wealth. Universal life insurance is typically for high net value individuals who are really focused on building wealth. But the main objective of universal life is that it gives you flexibility. Not only does it give you cash value and the capability to take out loans and things like that, it gives you flexibility on how much you want to pay in a premium. You can change the death benefit. You could just make changes throughout the years of the policy as you own it. You can, as life changes, you can make changes to your policy. So that's the overall benefit of universal life insurance. Index universal life insurance. Now, this particular insurance gives you the same flexibility and benefits of universal life. However, this is more intently focused on people focused on building wealth over time because your cash value of this policy is directly linked to the index of the stock market. So, as the stock market index increases, so does your cash value. Now, when the index decreases, you do not lose money. It just simply remains at zero. So that is the benefit of index universal life, as well as the flexibility of being able to change the death benefit, the premiums throughout the life of the policy.